Good day. This is the Elliott Wave weekly update for the NASDAQ 100, being recorded on Sunday, August the 11th, 2024. I'm going to begin today with the NDX, and I'm going to just take a look from the weekly chart. So I can just, for those that might be new to the updates, just kind of giving a quick review of where we are in this entire process of building upon a primary fifth wave up. So that primary fifth wave is going to consist of 5 waves of intermediate degree. And so far, we've only completed 1 and 2. We remain within the intermediate third wave. Within intermediate wave 3, there'll be 5 waves of minor degree, of which we have 1, 2, and 3 complete on a minor degree, and we are within still the minor fourth wave correction. And so based on that, I'm just now going to move forward that what we expect coming out of all of this would be the completion of a minor fourth wave, then a minor fifth wave up to complete intermediate wave 3, an intermediate fourth wave down, likely back to this area that we're looking for to contain the minor fourth wave. So we get back down into that area, go back up again in an intermediate fifth wave. So both with the minor fifth wave and intermediate fifth wave, new all-time highs would be expected on each turn. So when we go up a minor wave 5, we get new all-time highs. We come back down in the intermediate fourth wave, we go back up an intermediate fifth wave, and again to new all-time highs. Now, the time factor is the one that's kind of up a little bit because there's too many things out in our world right now which could just totally disrupt anything going on that would be building to an ultimate top things that could change an economy, things that can change just what happens around us that could affect our day-to-day lives and how we all move forward. Now, again, we've got to play through all of that, of course, but I'm going straight on a technical basis right here. And so what naturally gets you try to factor in, but you can't, honestly, is those unknown factors or those surprises or these, just this kick in the gut of the market type moves. Now, they exist, and they're most likely going to come on a geopolitical level versus a suddenly, the rug being pulled out from beneath us in terms of something economic. Not that it couldn't happen, but again, you would think that it wouldn't be able to happen without some kind of a sign somewhere. And that part either is being very well hidden or just not known yet. Now, having said all that, I present a pure technical picture here. And what the Elliott wave, along with Fibonacci and some other indicators, begin to tell us about what we're going through. So again, weekly, we're in a minor fourth wave correction, and we still have, accordingly then, 2 additional rallies, one in a minor fifth wave rally up, and then the second being an intermediate fifth wave rally up. Now, what comes in between all that? Well, we have this minor fourth wave we're engaged in right now. And when complete, we will get that minor 5, and then we come back down in an intermediate fourth wave. So we still have got the completion of this correction, a rally, another top, another correction, and then the final rally back up. Now, that final intermediate fifth wave to new all-time highs would then complete the primary fifth wave. That's the one we've been working on since October of 2022. And once we get up to that high, then we would be completing a cycle third wave. And we would be looking to drop into a cycle fourth wave, which again is going to take quite some time and will likely be extremely deep. Because we have to consider that it will be in that cycle wave 4. If we just use basic Elliott against my chart right now, we would be looking for, I'm going to take this out one more notch. We would be looking for the cycle 4 to come within to the price territory of the fourth wave of one lesser degree. Well, one lesser from cycle 4 is primary 4. So I can bring it back down to that weekly chart that I just had and open it up a little bit. And there is the cycle 4. So the window would actually, as I've drawn it here, would be here to here. So wherever we end up, 22,000, I don't know, we don't have those numbers yet because we don't have a point to build off of. But it would definitely be above 21,000. I think it'd be up to 22 or higher. And we're looking at a market that has the potential to come back to 10,000. So that's out there. That's a year or more out there. We've got a lot of trading to do in between. So getting back to this minor wave 4, let's start bringing the chart down. I'm going to bring it down to our daily chart, and I'll bring it down one more time, but because you're going to see that the market has progressed along, that I've kind of made a little bit of a definition, a little bit of a labeling change. I made reference to it during my daily updates last week, where I was really thinking that I needed to drop all of what I'd already labeled 1 degree. And that I've done. And it really has kind of presented a clearer picture in terms of the time frame that we've talked about. And that is by using the Fibonacci time fractals, that we realize that if the market came down to that level very quickly, and when we have to compare the times, like compare this to that, or even the wave 2 to that, well, it just really did not fit, and that it was way too quick, and that there was the potential that it could be of a higher degree, and this was just going to keep on sliding lower. Well, I think that's kind of released a little bit. No, it's not totally out yet that it could be of a larger degree, but by switching and just bringing things down 1 degree, right? So we're looking for a minor fourth wave. It's going to consist of 3 waves of minute degree, and that would be A, B, C. Well, by me lowering by 1 degree the decline we've had thus far, that brings minute A down to that low at 17,435. That's the low on the NDX. So, and we have kind of come into this box, this window. This is the area of the fourth wave of 1 lesser degree. Now, the guideline that Elliott left us basically says that the fourth wave will find its terminus, its endpoint, at the low or towards the low of that fourth wave of 1 lesser degree. And that number is 16,973, 974. Now, interestingly enough, it does kind of bring us in between on the cash market to the fib between fib 382, 38%, and 50%. So let me bring this down, because you see I'm building towards how we can likely get into this and still keep it within a minor degree without that necessity of having to really reflect, oh, this is something much bigger, this is something much bigger, because of the intensity of what we're seeing. Okay, so we're going to bring it out. That's the daily. I'm going to take it down actually to the hourly, because this is where it helps me when well, actually I can't. I got to bring it to the 4 because I need to see all of this. So let's open it this way, and now we can pull it in. So we see the start. Let's see how this all rolls out so far. And so right now, there is the top, and that's at 20,672. And that's where we put the top for minor wave 3. And then we have 1, 2, 3, 4, 5 for wave A. And then we have a B. So that's minuet, wave A, minuet, wave B. And then we actually did get a 5 out of this. I know it doesn't look it, but there's a 5 in there. And it is minute wave A. So what we're looking for is an ABC up, which seems to be underway in a minute B wave. Leaving it just as it is and working off of a 4-hour chart, it does appear that we need additional upside to complete the B wave. First of all, we have our fibs. Now, what are the most common for a B wave? Well, it starts at 38.2%, but really most common 50% to 62%. So we've got quite a bit more to go. But in my mind, what I find is that so much happens in the market while the cash market is closed. So A, we get a lot of gaps. Now the market just catching up to what the futures market did while this market is closed. I think we can get that as well. Or if we get a decent, say for example, tonight or this afternoon when the Globex opens, they just gap higher. And that would then produce a larger gap and continue to move higher, let's say. If we just get a larger gap tomorrow morning here at the regular opening for the cash market. So our fibs go as follows. We have 18,679. That's 382. That's pretty close, but I think that just that's not going to stop. I don't think that contains it. If anything, I've got an A, I've got a B, and we're in a C. So I can't speak to say this is 1, 2, and then we're going to get a nice third. It could be, there's all kinds of things that we have to allow in the cash market because, excuse me, because of it being closed while the future still trades. Now, so our resistance levels for this B wave, this minute B wave, 18,680, 19,063, and then we have, see what sits in between, the 50 and the 200 period moving averages. Those are in the 4-hour chart. I suspect that both of those will provide a little bit of resistance, but eventually will get broken. And then right above the 200, we have that 50%. But I think if we can get a good enough push, it'll go right through that and head towards this level. And that truly makes a lot of sense to me for the market to kind of get up to this level. There's a lot of bullishness in the market right now. There's a lot of just still, we're seeing round after round after round of, I'm sorry, of the marketplace coming back in to AI, coming back in to stocks like Apple and Nvidia and et cetera. They're pushing back into these markets and they're starting to sell the volatility. So we're seeing this dispersion trade, and that just forces the market higher. And so, but I think it's a B wave. And so we're going to find that we could probably reach these upper levels before the market then again turns, goes down in a C wave with the same intensity as that A wave, maybe even a little bit more intense. Now, once I get that B wave in, I will be able to add, go back out to my daily, one more layer of fibs to come back down. So what I can do here is I can do it as follows. So I've got all my markers, but if I need to just kind of, what would my C wave look like? Well, I can use these. So, and these are just guesstimates, okay? Because we have nothing to really say that the market's going to stop at 19,063 or 19,447. So I'm going to come in and I can just put in fibs to give me an indication. Well, there you see, we're down into here. And first of all, 618, a C wave being 618, that's possible, but it's not ever going to be my first choice. Equality is always going to be your first choice. And you see, we can dip below the 50% marker. Now, let me just kind of put one more thing in here. There's wave one. So can it come here and still keep this intact? Not really. That's a big one, where I feel that wave four cannot overlap wave one. That just disqualifies the whole move. So again, as we move forward, if the intensity brings us down here, well, it's going to give us an indication that this is all something different. Then we'll deal as is. I know there's a lot of people out there that they really want to bring back old counts that have been invalidated, and I get that. But I'm not sure why, instead of just dealing with what we have right in front of us, that to say that it was the top of a primary B wave is here as a part of a larger cycle wave four correction. That was invalidated. And once it's invalidated, it's gone. And we go to the next choice. And that next choice was that primary wave five is what's in force. So I may need to take this up to an intermediate degree, which would then, point to lower levels, but this count would have to change internally. Now, will I do that? Sure, if the market comes down here. So what I'm giving right now is on the basis of the count as it is, and if the market gets up to, why am I not getting them? See what that does? Wow, because I was on my daily chart. There you go. All right, so we get up to just the B wave, gets up to 50%. That doesn't say that the market has to come down here. The market still can find and finish here. We have additional Fibonacci support for a minor fourth wave right there. There's a window right there. Here's another. Now, not the first choice. The first choice is 100%. The second choice is 1.618. The third choice, or most common, is 618. What will become more important here, when and if it begins, is that the structure forms five waves. Now you may say, oh, that doesn't look like it's going to be possible. Well, that's the funny thing about the markets. Anything can be possible. All right, so I want to just switch this up one more and bring it up here to say it gets all the way up to that top level. Well, now you see, bingo, bingo, on the nose, the 100%. If it were to get up to this for wave B, it's 19,450, we'll call it. Then the C wave is equality and exactly at the same, or the 50% marker for the whole minor four. So I'm looking for a little bit more strength in that B wave. And then I will look for that C wave, and I think it can be very quick. It can be very sharp, similar to what we had, and get us down here in 5. And then we're just matching up. So again, depending on where it stops is going to depend on the severity, I think, of a C wave and where it could get to. So right now, I'm looking for it to get up towards the top end, towards 62%. The market definitely is kind of giving you that feel. Buyers, 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 and pushing, pushing, pushing. Everything is wonderful. Everything's rosy. So what we have coming up, of course, we have the August expiration, the monthly expiration, which is next Friday. And we're seeing some of the option positions kind of fall out, just move out. So what I mean by that is that it was so call heavy. August was very call heavy. September was very call heavy. Now we're seeing, just because of the movement that we've had, we're seeing that they've kind of filled in a lot of that what if, the market starts to really just collapse and go down. And so they're shifting. There are more tails being put into place. And what I mean by that is, like, downside protection. They're like limiting, all of this heaviness up in the calls and dispersing some of that. A lot of it already coming off. So we're seeing things start to even out a little bit, which gives us that two-way play a little bit more clearer, rather than just a disaster striking and boom, everybody gets caught and the market just gives up the ghost. So I mean, I am thinking that it should be pretty, I'm putting quotes around this, normal. And again, ton of things are going to turn it around and kick it down. So for me to put my finger on it and say this, and that is a little bit difficult. But if it were to just turn and drop from 19,400 to 16,200, well, that's a pretty big drop. And to do it quickly, it's going to feel like a crash. So all things in perspective, it could be pretty wild ride. Now, let me bring it back down to the hourly. So we're just going to look at these internals here. This one I'm going to take off because we're not sure. And now we just have these. So here we have in the hourly, we've got an A, we've got a B. I know what that looks like. This is something the market is tending to do right now. So it makes it difficult. If I break it down even further, we're likely will see that we have an A, we have a B, and now we're moving up in a C wave. And I think there is quite a bit more to do. And I think we can get up to there. So, and that's a good 900 points. Cash market 900 points. We're going to find some pretty stiff resistance right there, because you can see that the 50% retracement at 19,063 is on the hourly chart is buffeting right up against the hourly 200 moving average. Now, we got the 13 above the 50, the 20 coming right up to it. We get that 20 to move. These are moving averages. We get the 20 to move above the 50. It should add some support. And the market may just start to kind of, we'll find more buyers, and they're going to start moving back in on a moving average basis. Because the ticket would be, you break that one, this is where it's headed. And that fits, because that's where we'd like it to be to finish up this internal wave that we need to finish up, the B wave. All right, let's go over and take a look at the NASDAQ, at the futures market, and see how does that compare. Pretty much exactly the same. I'm just going to start here on the daily so that we can see we still have our box. Now here, we did get down to the bottom of the box. So, which gave that feeling, it's like, well, the possibility that, well, that wave 4 be done? Came down, met in the box, it did an ABC. Does it fit? Yes and no. Because of the minor degree, it does in terms of fibs and structure. It doesn't in terms of time. It doesn't when I look at how long wave 3. Wave 3 was in progress from March of 2023, completing in July of 2024. So that's over a year that it was underway. To consider that the minor fourth wave then would complete in less than a month, in fact, like 2 weeks, is possible? Yes. Real? Likely not. Which is why we came up with, but we looked at the Fibonacci time fractals when we had to compare this to this, that, it just doesn't fit. Or even if we compare this to this. So when you start moving it out to the possibility of September, before it's all done, then it starts to fit a little bit cleaner. So coming down, what do we want to say? Coming back to that daily chart, we're down into there. I think we're coming up in that B wave. Let's just open this up and we can take a look inside. 4-hour chart. We have 1, 2, 3, 4, 5 wave A. Again, dropping it all down 1 degree. Then we had in a regular ABC, excuse me, right? Because the B wave came down, put a slight new low. ABC for the B wave. Then we come back down, and it really was 5. Doesn't look it, but it was internally. And here we have the minute wave A. And then we have A, B, and a kickoff, beautiful kickoff. Remember, during the week, this strong decline that we had one afternoon when they decided to sell everything. And then the very next day, an engulfing bullish bar. Beyond, engulfed totally. Went lower and finished higher than that bar. Engulfed it totally. That gave us a clue we're going to continue. And we did. And we are. Now, let's bring it down to the hourly chart here, and now we can take a look inside, and we can see, yep, we got a funky wave A, which let me realize that, because I continue to say that when we're done with this minor fourth wave, I really still would be looking for a V bottom. This is not it. This is not a V bottom. So that also lent me to go like, well, then this is not likely the completion point. So I had put it down, and I'd put a wave A down here, or an ABC, and then gave all of the possibilities that, well, maybe we go through a sequence, ABC, X, ABC. But now, if I recount and bring it down a degree, this is minute A, and we're working through minute wave B. Now, what are the possibilities for minute wave B? Well, what we have is that we are in A, B, and now we're coming up in a fifth wave. You see that all just really kind of looks clean. 1, 2, 3, 4, 5. Then it goes down, but then we start back up again. So what we have going on is the possibility that it is done 1 of C, 2 of C, and we're just going to launch higher. Now that would be one thing, that we start from here and we start heading towards here, and then ultimately possibly up to here. Now, once complete, what does that tell us about coming out of all of this? And when it's time to start to come down again, and we have our upper levels, and then here's the 50%. Are we really looking for this wave 4 to come below the 50%? That would take it pretty far below that window that we have, right? Let me go back up there and do that again. So here, there's our window. Let me take it down to the 4-hour. I can still pull in our window. And we've already gone below it. Not by a whole lot, but we have. So would I expect it to really drop below this level? Of course it can, but then it forces the argument, is it something bigger? Yet to be determined. So what I'm working with right now is that I think I can do it right from here. So let's just, come on, computer, please. My mouse and my computer don't seem to want to talk to each other sometimes. And so it really can be quite annoying. So, son of a beehive, huh? Let's try this again and get my finger correct. There we go. All right, so what I'm really going to be looking at is, let's put in the potential, and actually this needs to be there. There you go. One little fix. All right, so I'm going to start from here, And I'm going to take a look at, and we're going to go back over to here, and we're going to put in this, and it comes down to this level. Well, let's take a look if it goes up to this point, which is 18,950, we'll call it. Now, what does it look like coming off? Well, 62%, right, brings us down to 16,707. The 50% marker for the wave 4 as at 16,390. Well, where's equality? Down here, 15,323. Can it? Yes. But let me go back out. Wave 1, minor wave 1 is in the NASDAQ, is not going to get caught up in any of this. I can't even, it's all the way down there. Minor wave 1 is all the way down here. This thing would have to truly fall apart before it would invalidate the whole thing. But I wouldn't think that 15,323, we're invading a lot other territory. Not, wave 4 overlaps wave 1, that would not be included. But in terms of just the size, that'd be pretty big. It would be pretty big. But then again, so was that third wave. Now, bringing it back up, let me take it back up to my 4-hour chart, open this back up again. Now let's just go in and reflect against one higher. And you're going to see why I'm continuing to point like the rally is likely going to get us up a little bit more than there. And that basically will work. So here, now, you're going to see there's the 50, 16,389. There's the 100, 16,055. And if it came down and held there, then this is the winner, right? The fib for the minor 4 versus the fib for the C wave. So again, it will be structure that is the most important. But you can see, remember what I was talking about before. Okay, so there's that number. And you're going to now let's build the case for why should we consider that it can move all the way up. I'm going to get rid of that. Now we just got our numbers going up. And I'm going to bring it down to that hourly chart again. And now let's take a look. Remember what I just did? 1, 2, 3, 4, 5. 1, 2, or we have 1 of C. A, B, C. So we start actually down a little bit. A, B, slightly irregular, come back down, maybe hold here, or I can run fibs from here. I'm just going to put straight fibs, right? We can come down to 18,300, 382. That would be pretty clean, right? We've already been close, right? A, B, C. So let me just get in there and clean it up so I can go take a look of what we got going on. Get rid of that one, get rid of that one. And let's get rid of all those. And this is that color. I just want to put our colors together and then say, okay, there they are. So if we were to come back down, okay, so we start tomorrow, we're just like, okay, we're marking this as 1 of C. And here we're going to 1, 2, we still got to maybe finish this 2, and we get drop down to 18,300, maybe even 18,194 or 18,200. Those are our fib levels. We can come back down to here, turn, and start to rally again in a third wave, 3 of C. That should be pretty powerful. Even if we just took it to this size and we put that to here, we're going to be up into here possibly. And then we have a small 4 and a 5. Why couldn't we get up to there? Why is that not reasonable? Well, because we'd be exceeding this high, the 62%. maybe, but these are close. It could get here. But you'll see that then lines us up more cleanly for down here. So it all starts to fit in terms of our fib calculations are just giving us an indication and a possibility of where the market could go. Very often, as we know, fibs get hit on the nose and produce a turn. And the primary reason is because they get programmed in to all of the algorithms. So that stuff exists. So these possibilities are real. I'm pretty comfortable with what the market is doing in terms of how I'm labeling it now. So I kind of cleaned it up a little bit and took out a lot of the additional layers. And right now I'm going to leave that in, but I don't need, I'll actually leave them all in, just kind of giving where if we do a small finishing wave 2, we could start the day, start the week, just kind of with a little bit of a lower move and then rally intensely. I mean, it could just start open lower and then boom, buyers take over and we just pump all day long. So that goes along with what I've been talking about with that dispersion trade where they're selling volatility and buying all of the volatility of the underlying stocks within the index. That could also happen again. And you'll see it because what it is just march higher, pull back, very minimal, march higher, very minimal pullbacks. And they just end up big on the day. Could happen. All right, that's going to be it for the NASDAQ. Next week, let me just take a quick look because it seemed to be like last week was employment, I think, or maybe this week. Let's see what they got coming out. For this week, on Monday, we have the monthly U.S. federal budget. And Tuesday, we have PPI. Yay. No. So next week is PPI, CPI. That could drive it lower. You know, it depends on how they come out. It's either going to give it a massive boost or it's going to be nobody's going to really, they'll take it as positive. So Tuesday, PPI. Wednesday, CPI. Thursday, initial jobless claims, Empire State PMI, Philly PMI, U.S. retail sales, import, export prices, industrial production, capacity utilization, and business inventories. Thursday's a big day. And Friday, not much. Consumer sentiment, housing starts, and home builder confidence. Okay. So the big Tuesday, Wednesday, Thursday, big days for our economic data. All right. That's going to conclude it for this. I'm going to get this posted and then I'll get started on the S&P 500.